Hey, everybody, and thank you for attending another episode of Running a Holistic Office. So, it is the middle of the month, so it's time to review our financials. But first, I want to introduce myself. I'm Kristen Ford. I am the CEO and co founder of Holistic Office, an electronic health record management system for independent practitioners who want to spend more time with their patients and less time on administrative work. Yay! So while we're waiting for a few more people to show up, I want to invite all of you, if you have not yet connected with me on LinkedIn, to please do so. Always looking to meet new people and to learn from you just get to know y'all. So please connect with me. As I started to mention, this is the middle of the month, and every month, I really think it's important for every practitioner or business owner to take a minute and review the financials from the previous month. And last month, we started this series and we talked about nobody's favorite topic, budgets. So thankfully, we've moved on from that. And I showed you really kind of a workbook of the different types of reports that you have that you should be reviewing every month. And one of them, which I think is the most popular one for everyone, is the profit and loss statement, which is also called the operating statement. So this week we're going to take a little bit of a deeper dive into the profit and loss statement. Can you hear the applause? The crowds. I know, it's awesome. All right. So as we reviewed before, the profit and loss statement is popular because it shows what all of our income is for that month, right? It shows us all of our revenue and it shows us all of our expenses. And so, and also shows us our Cogs, and we'll talk about Cogs in just a minute. And the other two things that you can easily get from your profit and loss statement is something called your gross margin and also your net operating profit. And I'm focusing on these four basic things because these four elements, right, of the operating statement or the profit and loss statement is really it really gets to the core of your sales, right? Your sales and expenses, your operating sales and expenses. So let's talk a little bit about each one of these, just so that you're really comfortable on what is in your profit and loss statement, and also so that you can make adjustments if it's not giving you the information that you want. So for people who don't know a lot about my background, I was a financial accountant. Okay, so I always came to the table with what is going to give the owner the most amount of information on how their practice is running, okay, or their business is running. So there's different types of accountants out there. There are CPAs. I'm not a CPA, never was a CPA, and won't ever be a CPA, and I'm okay with that. I'm also not a tax accountant. And it's important that you know a little bit about these distinctions and where I'm coming from, because I have actually worked on books where the tax accountant was doing the books for them. And it was really set up in a way to get the least amount of information about how your revenues coming in, what kind of revenues coming in, or even the types of expenses, that you're making, because from a tax perspective, it's kind of all the same, right? So they're not going to be as interested on whether or not your services, what types of services are most profitable for you, because they're all taxed the same way. So I always come at this a little bit differently. That I'm like, it's the middle of the month, and let's talk about, how your company's doing and where you can focus some time to either, reduce expenses or increase revenue, or whatever goal it is that you have for your practice, right? And this is just a really cool way to start, strategizing about your practice and what you want to do with it, as opposed to just reacting to it. And, you get to the end of the year going, dang, what happened there, right? So the first thing, we talk about here is, our revenue. And it looks like I might even be missing a little bit of the slide about that. That's fine. Okay. So I'm going to share my screen just for a minute. We're going to go back to our sample company here. And I'm like looking around to see how I can do that for you real quick here. So let's add a quick screen share and let's see what we come up with. And here it is. So let's see here. I don't even know if you can see that. Can anybody see that? There it is, that little tiny thing. I'm gonna make it fuller. All right, I'm gonna get fuller. I'm gonna move it over just a little bit so you can see it better. So, right up here, we've got a little cursor here. This is where we have our revenue. Now, right now, you're just looking at a bunch of totals, and this is called a rolled up view, right? And so we have kind of our total of our service revenue and our product revenue. And if we actually decided to open some of this up, you can actually see that you have various services and revenue, and you can set up your books. And we talked a little bit about this at first. And so your revenue pieces here, they're all going to start with the number 4, right? And that's how your bookkeeper always knows it's revenue and not an asset or something else that doesn't that won't show up on your profit and loss statement. That's for sure. And then you can organize them however is most appropriate for you. So let's say you sell different types of products, and let's say have different types of services. You can categorize those any way you want. And this is the report where it's going to show up on. So for December 21st, look at that. We had $615,000 worth of service revenue. And, we've got basically $51,000 of product revenue, What a great month, right? So, and this is a great time for you to say, well, geez, but I want to sell more products. So this is a great time for you to say, okay, well, product type 1 is really great and people are liking it. So let's focus on that. But let's look at product number 2 here. I mean, we have a negative amount. So, this is time for you to say, people just aren't liking that product. Maybe it's time for something different, right? Or maybe we have to talk about a different type of patient, or that would be a better fit for that type of product. But this is where it all comes down, right? So this is where you can see all those things. So super important to know. So again, we've got our services here and our product types and all that kind of great stuff. All right. So moving on along. We also have on our report our expenses and our Cogs, right? And I guess we're just going to keep this full screen for a minute here. Let's make it a little bit nicer. I like our trees and our window in the background. Okay, so anyways, the other half of this report are our expenses and our Cogs. So I think everybody knows when expenses, we all get bills, we have to pay them. And these are all of our operating expenses. So these are the expenses that go into running your business. It does not include things like, everybody loves to throw around EBITDA. So it is, there's no taxes involved with this, or amortization or interest or depreciation. Okay. Because all of those things may cost your company money, but it's not something that is part of your operating expenses. So, and then you also have your Cogs, and these are your cost of goods sold. Now, in a practice, your cost of goods sold is going to be any money that you've spent on the products. That's your wholesale, right, on the products. And it's also going to be all of the supplies to, provide your services. Okay. So if you, if you are a chiropractor and you have a special, like painless mechanism that you can use for adjusting, and you buy those, that's a cog, right? Because that goes into actually one of your services. The other thing that goes into your Cogs are is the labor involved with providing your services. And so, and I see this quite often, especially when we have a smaller practice, and we have really maybe one doctor or doctors and a physician's assistant who really provides all of the services there. And, and really they're Cogs, okay? And that is something that goes into providing your service. Without these two people, those services are not there. So So I personally think it's really important to understand, what the different aspects of these different types of COGS versus operating expenses are. And the reason why it's rather important is that we end up with these really cool different um, calculations that people love to sling around. So, you're at a conference and someone goes, "So, what's your gross margin?" Right? Sounds like a pickup line. Not. Anyways, so your gross margin is the revenue minus your COGS, what it actually costs you to provide your services and sell your products. And basically, it's revenue minus COGS equals the gross margin. Okay. And that is all the money that's left over for the rest of the operations of your company, of your practice, right? So that's the printer ink and rent and the receptionist salary and all that kind of great stuff. So this is something that it's a KPI, and people do track it, and it gives an idea of really how efficiently you are managing your practice. And it can also tell you a little bit about your pricing as well. So if every industry has average gross margins of percentages, and you can always check and see how you're doing against those, and even just in your particular area as well. And it gives you an indicator of maybe you need to raise your prices, or maybe you can buy some of your supplies in a more efficient way. So that is one of the really, bitchin' KPIs that, the next time you're at this event, you can go, well, my gross margin is just way below, where it could be. I mean, we run a tight ship, right? And everybody's going to go, this chick knows her business. So, all right then. So the other, KPI that is really super important, and I think everybody is a lot more familiar with, is your net operating profit, right? So, and that is your revenue minus all of your expenses. And so that includes your cost of goods and just all of the expenses and what you have left over. And that gives you this awesome, net operating profit. So if we kind of come back to we'll make that just a little bit bigger here, and let's scroll down just a little bit on that. So we have all of our expenses down here, and at the end, and I'm going to move out of the way, right over here, we have our net. Here it says ordinary income, same thing, operating income. And it looks like this groovy little practice made $93,000 that month. So that's awesome, right? So let's see here. Is that really, am I looking at the right one? Yes, I am. Okay, just want to make sure, folks. So we have our $93. So that's right here. And that's our net ordinary income. And we call this, this is your earnings before interest, taxes, depreciation, and amortization, that EBITDA we were talking about, okay? And so if you kind of scroll down just a little bit more, these things do show up on your profit and loss statement, but we call it a little bit below the line, right? So if we have other income, maybe one-time things, refunds or whatever, it doesn't really have anything to do with operating your company. We could put this here. And then we have other expenses as well. Maybe you're making a provision for what your corporate taxes are going to be, which is always a good idea so that you can plan ahead, because we use accrual accounting, right? Right. So anyways, and then that gets us down to our bottom line, which is our net income. So, and in this particular case, we don't have any other income or other expenses. So, the net ordinary income or the operating income is the same as the net income down here. But, it's not always the case, and it's usually not the case. It's just, this is our little sample company, and I just really want to make sure you understand the different parts of these things. So, there you have it. Our net operating profit is our revenue minus expenses and is before our interest, taxes, depreciation, and amortization. So we can say that maybe 3 times fast, right? Interest, taxes, no, we can't. All right. So anyways, hopefully you are not asleep like this child is. Yes, our chief companion officer has finally laid down. I have finally bored her so that she can go to sleep. But we love her. Let's make her a little bit bigger. Oh, now I'm in her mouth. That's not good. Okay, bring her back to the shoulder. So anyways, so there you have it. It's not that difficult, and you have made it through walking through a profit and loss statement. The more you're comfortable with your profit and loss statement, the more control you're going to have over your company almost instantly. And I promise you, it's going to be something that as you do this a few times, you are going to really be in control of your practice. And you're just going to start seeing things a little bit differently. And it also gives you an opportunity to then have follow-up meetings, right? So, you're working with your marketer, and let's just say you want to, maybe bring in more new patients, right? Or you want to maybe, help the patients that you have. You send them all out to buy, vitamin C, but you've got the best vitamin C ever from your physician-only channel, and you want them to know about it, right? So that's just a great time to follow up with whatever department there is about, how do we increase sales, bring in new patients, and reduce expenditures. And spending a little bit of time on this is just going to save you a ton of time later. And it's just going to make for that much better at the end of the year, right? So that's really it for today. I guess we are going to see you next Tuesday. It's going to be the last show of the year. Do you believe that already? But it's going to be next Tuesday at noon. Please like us on Facebook if you haven't already, and come visit our website and learn more about our EHR system. And if you have any questions, you're always welcome to message me. And in the meantime, you guys have an awesome week. Thank you. Bye-bye.